Thank you, Chairman Crapo, Ranking Member Brown, and distinguished members of the committee. I've submitted a written statement for the record that details the CFTC's work and authority over virtual currencies. But with your permission, I'd like to begin briefly with a slightly different perspective, and that is as a dad. I'm the father of 3 college-age children, a senior, a junior, and a freshman. Suddenly, they were all talking about Bitcoin. And I imagine that maybe members of this committee may have had some similar experiences in your own families of late. It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one. And yet we must crack down hard on those who try to abuse their enthusiasm with fraud and manipulation. I suggest that the right regulatory response to virtual currencies has at least several elements. And the first is to learn everything we can. Next is to put things in perspective. As of 8 a.m. this morning, the total value of all outstanding Bitcoin is about $113 billion. We have a slightly different figure than you have, Chairman, but close. But the point is that that's less than the market cap of one large publicly traded company, McDonald's. The total value of all virtual currency in the world is around $313 billion. In comparison, global money supply is around $7.6 trillion. And that leads to the final element, and that is tough enforcement. Led by the CFTC's Virtual Currency Enforcement Task Force, we've launched several civil actions over the past few weeks, cracking down on fraudsters and manipulators, and more will follow. These markets are new, evolving, and international. They require us to be nimble and forward-looking and coordinated with state, federal, and international colleagues and engaged with important stakeholders, including Congress. I'm glad to be with you today, and I hope my kids are listening. Thank you very much.
Bitcoin, or are these as currently being traded, are they a commodity, or are they a security, or are they both?
Bitcoin is a medium of exchange, a store of value, or a means of account. Means of exchanges have been closed to Bitcoin. There was recently a Bitcoin conference that stopped accepting Bitcoin for registrants because they couldn't process the payments. But yet it's still spoken of as perhaps a means of account. From our point of view, when it's used as a store of value, then it's very much like an asset, like a commodity. And in fact, what we hear a lot of is people buying and holding. If you go on to the Twitter universe, you'll see a phrase HODL, which means hold on for dear life. And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks. And so in that regard, from our point of view, it's a commodity. And if there's a derivative on that, we regulate it.
Well, what little time we have left, I'd like both of you to respond to the pump and dump efforts that are underway right now. You see this beginning to develop. I know you're both involved in this. Can you both address what your agencies are doing to combat that?
Senator Perdue, this is one of the things that I'm worried that investors don't understand, which is when you have an unregulated exchange, the ability to manipulate prices goes up significantly. And just a few coordinated sales can change a price.
Or an email, a fraudulent email.
Correct.
What would you say to them to help protect them from winding up in a situation a few years from now where it didn't quite work out the way they were hoping?
But what I would say to them is it's the same advice I'd give my children. If it sounds too good to be true, it is. If they're promising ridiculous returns, they're ridiculous. If you are going to give them money, you'd better be prepared to lose it.
Senator Warner. I usually agree with my friend from Louisiana, but I think we may be on top of something that is transformational, and I don't think you can separate the underlying distributed ledger or blockchain from some of these crypto assets. And if we had the same rate of increase that the next 2 years that we've had the last couple of years, we're talking now a couple $100 billion, we'd be at north of $20 trillion caught up in this area by 2020. And I I think I remember back, I was lucky enough to get in the cell phone business back in the early 80s, and everybody thought it was going to be a small business, and they were wrong, and I got rich. I think we're looking at the same kind of transformation about to take place, and we are going to have to wrap our arms around it. We're focused a lot on Bitcoin and crypto assets, cryptocurrencies, and I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating, file sharing or extra computer time. I'm not sure what kind of assets those fall into. Are they potentially regulated within your realm, or if there is a trading exchange, a tokenization exchange between excess computer time? I'm not sure where that fits at this point.
If you're giving people money in exchange for a future development of a business with the hope of a return, and whether that return comes in the form of server time or your ability to sell server time, it's a security.
What are your thoughts on the potential value of that underlying technology of blockchain and distributed ledger technology, both to enterprises and consumers and perhaps to government agencies?
But right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services.
Many of these ICOs are relying on celebrity promoters to gin up the sales. For example, last year, Floyd Mayweather, the boxer, used Instagram to promote the purchase of Centra tokens. And I worry about unsuspecting investors that don't have the resources to understand the true risks. What can the SEC do to better protect investors who may be persuaded by celebrity promoters to purchase tokens offered in initial coin offerings without fully understanding the risks?
Some time ago, we put out an alert that said, if you are promoting securities, you're taking on securities law liability.
However, some critics have warned that companies are using blockchain as an opportunistic venture to pump up stock prices without having a clear business plan. One company, Long Island Iced Tea, I understand, changed its name to Long Blockchain and watched its stock soar. So are you concerned that companies may be utilizing blockchain as a scheme to pump up their stock prices? And I'm going to just open it up to both of you.
Nobody should think it's okay to change your name to something that involves blockchain when you have no real underlying blockchain business plan and try to sell securities based on the hype around blockchain.
In 2017, companies raised more than $4 billion in ICOs. How many of those companies registered their ICO with the SEC?
Not one.
Not one. And as of today, how many companies have registered for upcoming ICOs?
Not one.
Not one. So we're still at zero. Can you just say a word about why that's so?
Disclosure light benefits of a private placement and then add to it the public general solicitation and retail investor promise of a secondary market without registering with us. And folks somehow got comfortable that this was new and it was okay and it was not a security, it was just some other way to raise money. Well, I disagree with that.
I am understanding you to say it is a violation of the law.
Yes.